Hello traders, welcome to the Wednesday trade recap and forecast. So I did take some trades, actually a lot of them, I think 4 or 5. We're starting with EU. I had one trade on EU, it was right here. So for the prior price action and for this trade, let me tell you what I was seeing. I was seeing a V reversal and a push up. So here was the V. We got also a bit of a range. Now I do talk about this pattern a lot. Usually this sort of pattern does continue trending up. So right here I was looking either for a break and retest or a flag formation. In the end we did get a flag formation. So let's print it. Okay, so we have the first high, first low, second high, second low. Blue candle is the entry candle. And this was textbook to me. So this was a 10 out of 10 trade. No brainer. Prior price action for me was high probability. I was expecting price to continue going up. The flag formation itself was very good. No momentum shift, quick flag, tight flag, really small flag. It's kind of the best possible scenario. This wick, not really a concern. If it was a bit bigger, if we got like a huge wick here or a larger wick, I would be looking for more of a range. But in this scenario, I tolerated the wick, especially when I took all of the other factors into account. How did we end up on this trade? Well, it did go up, it did break the high, and I managed to reduce my risk, I think somewhere below here, so right here, and I think I took a minus 0.5% loss on this trade. So it was a loser, but it was a textbook trade for me personally. Let's take a look at the current price action. So for the current price action, did I have any orders on here? No. Price went down, descended, then we went up, then we broke the high, retraced, then we went down again. There was a flag here, but for me I saw a clear momentum shift in the beginning of the flag. Also prior price action was more range bound. Then we broke the high, retraced, broke the low, and now we are retracing. So this is clearly stuck in a large sideways range. No potential, not showing me any good price action. I'm waiting for a large impulse up or a large impulse to the downside, like this. So yeah, that's about it for EU. Nothing to say, this pair is just range bound. But other pairs are looking better. For example, Euro-Japanese yen. Did I have any trades on this particular pair? No, I did not, but I do really like the current price action. So let me run through what is happening. Yeah, I didn't have any orders on or any trades. Right here I expected this to continue down because, let's print the next one as well, because we had this range, ascended into the upper liquidity area, got a momentum shift to the downside, and I expected the price to keep moving down, which it did, but it moved down correctively. So it kind of started to descend. You can see breaking the lows, retracing, breaking the lows, retracing, again breaking the lows, currently retracing, breaks the low again, retraces. So price is struggling to go down, and now we had this sort of an entry. So for example, maybe some people were looking for a break and retest. For me, absolutely not. We broke out of the range, broke the high, retraced, broke the high again, retraced, not enough. So at this point, I did not have my order on, but I was definitely interested for this to go up because I was seeing a nice, clean descending structure. Usually after a descending, I expect the price to start trending in the opposite direction. But current price action looks promising. I like the current price action. We do have a nice impulse. Again, a bit of indecision now with this red candle, but I can tolerate this. Especially, I would say the prior price action is high probability, as I said, to continue trending up. So I am looking for an entry. I'm looking either for a flag formation here, or I am looking for a break and a retest, because I like it. If you combine the prior price action with this push up, it does look good, and I see some potential right here at this point. So EJ is on my watch list and I am looking for an entry setup again. Wednesdays, Thursdays, Fridays. Today is Wednesday, which is a good sign. That is usually when we get the trends. That is usually when the trends start. But I need to see a clean flag formation. If I get any sort of a momentum shift, I will of course be staying out. So I don't want any momentum shifts inside of the flag. I think we can move on. Aussie US dollar. Let's run through this one. So per price action, I did take a trade right here. Per price action was not looking that good, I have to say. I mean, we were kind of descending in this larger picture, but most recent price action, this impulse came out of an ascending. So to be honest, the only thing I was taking into account was this right here. Were there any opportunities prior? No, we were just kind of moving in a flat range, so nothing interested me. But I saw a nice impulse, I saw some nice momentum, and I saw a 3-bar flag form. So this is called an advanced flag or 3-bar flag, many names, but important thing with this formation is price is struggling to go down. So the flag is setting up in only 3 candles, and the less candles there are, the more you can expect the price to continue trending to the upside. So we had this inside bar, outside bar, so this high is higher than this one, the low of this candle is lower than this one, so this candle engulfed this one, and the entry candle is the blue candle, so that is our advanced flag. Then we had spread hours, and I entered after spread hours finished right here, and this ended up being a nice winner. I think I took plus 2.7% on this one. So yeah, nice trade, nice winner, and a textbook high probability trade. This one was a 10 out of 10 for me, no brainer. So I'm not even thinking about this trade. The advanced flags or the 3-bar flags work extremely well on every single pair, and especially on the Aussie US dollar. These have a really high win rate and bring really good percentage, so just complete no-brainer, great setup. Okay, then we continued trending up, descended here, continued up. There was another flag formation right here. So this was another flag, but for me, this wick was absolutely too huge. I was expecting a much bigger range. I did not want to take a flag after this huge wick. But I did have my order on here for a reversal. What did I like about it? Well, I liked that price was struggling to go up. So price was ascending, especially with this clear rejection. You can picture many retail traders selling each one of these candles when they see a huge wick. Usually they sell, and you can picture a clear liquidity area above this range. We went into the liquidity and we're struggling. So price was struggling to go to the upside, and then we got a clear momentum shift down. Nice big red candle, and I did have my order on to sell. This for me is a high probability setup on the Aussie US dollar. If we see a nice ascending, nice descending, and then a clear big momentum shift, I like those trades, but I did not get tagged in. Next candle went further down. I then removed my order because it no longer fit my plan. Current price action doesn't look very promising. So at this point, I'm seeing a bit of a slowdown, and I'm seeing a large wick. That's not really something you want to see. I would say prior price action is still high probability, and I like this momentum shift. So prior price action for me is still a go. But this current price action, this slowdown and the wick, I'm being a bit more patient. So I need to think about it. I would maybe take a flag if we get a range here. I would consider taking it. Best possible scenario for me is that this pauses and then we break the low and get a break and retest opportunity. I would 100% take this. This is super high probability if we get a clean close here, of course, so no wick, because those types of trades work extremely well on the Aussie US dollar. So that's what I'm looking for. I'm looking for either a range, then a flag, or I'm looking for a nice break and a retest. But again, look for a nice clean close break. Okay, or maybe this continues down a bit further, and then I would look for a flag further down. You never know, but spread hours are very close. So spread hours are starting in around an hour and a half. Usually spread hours look like this. So we will see what will happen. Again, if this decides to kind of range around and then break the low with momentum, no longer fits my plan for a break and a retest because I expect this to fail and reverse. So I need that quick pullback and I need a strong continuation down. Moving on, Aussie Japanese yen. No trade for me. There was one really good setup. Actually, there were two setups. First, we had a flag here. Didn't fit my plan. The impulse was not enough. So the impulse was slowing down on the top, not big enough. Also, you need to look at the prior price action, something I have been working on for the past couple of weeks. It's really important. What is the prior price action telling us? Here, prior price action was range bound, not giving us any sort of confluence or confidence. So yeah, the impulse was not enough for me and I did stay out of this trade. It would have been a really nice winner. And then another setup formed. This one, which I 100% would have taken if I was trading it. So it was NFP. I don't trade after 8 a.m. London Open on NFP Fridays. But if I was trading it, I would have taken this setup and it would have been a nice winner. Again, I was not in this one because I was not trading on NFP. It is what it is. Sometimes you will save percentage, sometimes you will lose percentage. But in the long run, it's much safer to not trade NFP because it can really stop you out of positions, and not just for 1%, but for 2%, 3%. You never know because the spreads expand drastically and the price is usually erratic, moves up, moves down, stops everyone out and gives you really bad execution spreads. Okay, we continued up, triple wicks, continued. So right here, this is messy. I don't like this price action. It's just range bound, correctively ascending. I wasn't looking for any sort of a reversal. I wasn't looking for any sort of a trade in this general area. So I need the price to clean up, especially on this pair. Reversals are not really high probability on this pair. That is what I have found. So I'm just being more patient. I'm seeing if this will potentially clean up a bit, give us a better ascending, and then reverse to the downside, or I am looking for a simple large impulse up or a large impulse to the downside. So this pair is 100% not on my watch list. Pound. What about the pound? I did take a trade on the pound. Right here, flag, nice trade. What was I seeing? I was seeing a nice impulse up. Prior price action was flat, range bound, not really giving me much confidence. So I definitely was only paying attention to this impulse, but it was a large impulse. It was a good move and the flag was also textbook. Double wicks on the top, but small. Look at the size of them, not a concern for me personally. Small, tight flag, no momentum shift, quick flag, 1, 2, 3, 4, 5, 6 or 5 candles inside of the flag. So best possible scenario, 10 out of 10, a no-brainer for me. I'm taking this all day. So Aussie US dollar, Euro US dollar, Pound US dollar all had flags form at a similar time and all of them were textbook no-brainers. 100% would take them. And also it turned out to be good because Aussie US dollar went into profit. EU and GU lost unfortunately, but they lost with a reduced risk because broke the high and then stopped me out for, well, it stopped me out for more than I wanted because so I reduced my risk, but it was NFP. This candle was the NFP candle and as you can see, it just whipsaws you up, up, down, so you get stopped out and you get stopped out for more than you actually planned to. So for this one I lost the full 1% because of the spreads. Yeah, it can happen, especially because my stop loss was so close to the NFP event. Okay, so what is currently happening with GU? Took a 1% loss up there, but we descended, went up. There was a flag opportunity right here for me. Did not fit my plan. We broke with just huge wick, filled one candle, So yeah, this break was not enough for me. Also, price was looking kind of stuck inside of a V. What do we expect when we get a V reversal? We expect a larger, wider range. So I did not want to trade this type of pattern, especially on a Monday when we expect more range-bound price action. You have to weigh all of the confluences up, all of the warning signs, and then make a decision. For me, it did not fit my plan, and it would have been a really small winner, I believe. Not really worth taking the trade. Okay, then there was a setup here. For me, this was the high that we broke. So we basically broke the high, retraced, broke the high again with massive strength, and I did not want to place my order here because it was, first we just broke this high, retraced, broke the next high, and we would have retraced. Second reason, the entry was too far away. So for the price to tag me in on my entry, which would have been on the top of this inside bar right here, price would need to print a really big candle, which would be a clear momentum shift. If you compare it to the prior impulse candles, it would have definitely shown you some major selling pressure. So I stayed out of this one, managed to avoid a 1% loss. So good that I followed my plan. So yeah, that's about it for the pound. Current price action, crap. Range bound, I don't like it. Pushed up, retraced, pushed up, retraced, pushed down, retraced. I'm expecting a larger and a wider range for the pound. Just looks very bad. What am I looking for? I'm looking for a large impulse up or a large impulse to the downside, and then we will see what will happen. Final one, New Zealand Japanese yen. I did take a short trade, which I did cover in the last video. It was right here, 1% loss, but fit my plan. I would take the trade again. I liked it. Basically, yeah, I covered it in the last video, so no point in doing it again. But what happened next? There was a flag here. This one did not fit my plan because prior price action. What was the prior price action doing? The prior price action was range bound. Then look at the size of the break. Break was really small. This is where we broke the high. Not enough of a break. So this prior price action combined with the small break, this trade did not fit my personal plan. And then what happened? Price continued up, so it would have been a nice winner, but if it doesn't fit your plan, you cannot take it. And maybe in a large sample size, actually 100% in a large sample size, this kind of trade would be net negative. That's why we stay out of them. This is flat. This is completely range bound, not showing us anything. This looks really bad. I don't like it. I'm looking for a large impulse up, or I'm looking for a large impulse down. So large impulse up or a large impulse down. Right now I'm being much more patient. This is definitely not on my watch list. I'm not looking for any sort of a setup. On my watch list we have EJ, which I like, moving up, looking to buy, and we have the Aussie US dollar, which is expected to start trending to the downside because we had some clean prior price action and a clean momentum shift going down. So that's it for this video. Wednesday, let's see if we can get some setups. Make sure you stick to your plan, but keep taking those trades if they do fit your plan. Don't get conservative if you're in a drawdown, because that's what happened to me. The worst time to get conservative is when you're in a drawdown. The worst time to change your plan is when you're in a drawdown, because you're gonna miss out on the winners. Last time, or actually I think it was a year ago, I was in a drawdown, changed the plan, next trade, huge winner. That's what happens, so make sure you don't change your plan if you're in a drawdown. Just keep taking those trades. On a large enough sample size, you will be profitable. That's it, see you guys in the next video.